Well, good afternoon. Good afternoon and welcome to another Webinar Wednesday, number 319 in our series, going all the way back to 2013. It's May 29th, 2024, and we've got a timely program for you today. We have Morgan Clayton, the founder of Tel-Tec Security Systems. We're going to be talking about a crisis that I deal with every week, talking to small businesses throughout Kern, Inyo, and Mono counties, and that is the cost of insurance and the cost of other costs that are going on. But insurance and managing your risk, more importantly, I think we all think of it as insurance, but it's really managing your risk component is going to be our topic today. We're going to get into it big time. And today is Wednesday, May the 29th. I hope you like my flag in the background because I am still on a Memorial Day bliss. So really our first very patriotic holiday of the year has come and gone. And as it comes down with it comes National Small Business Month. So for the most part of May, we've spent celebrating National Small Business Month, and it is winding down and concluding the end of this week. But it's been a great month, and I'll share with you some of the reasons why we missed you a couple of weeks ago with no webinar, and that is a celebration that we had honoring the Central California Small Business of the Year. So with it seems like coming out of the pandemic, or maybe starting with the pandemic, it seems like we have a crisis of the day, and crisis of the day today. And for many of you, for many, maybe months in the past and moving forward, is the cost of insurance and the fact that it's spinning out of control. So related to that is managing risk for a small business, managing the assets that you've acquired and determining a safe level of risk and understanding all your options and getting more assistance when you look for those that are in need of it. So we will also dive into that. It's a great topic, timely topic. We will cover a couple of our regular columns here on Webinar Wednesday, including the Economic Corner. We'll talk about interest rates remaining high and being another drag on the bottom line, like we needed another with supply chain issues, inflation. Well, you know. Yeah, so we'll hit on the insurance rates remaining high, and for a lot of you with variable rate funding, such as SBA loans, that continues to be a big issue. Capital quarter, looking for accessing capital. So we'll talk about, some of the funding resources that are out there, and we'll talk about one that's kind of tied to interest rates for a lot of people, but surprisingly a little bit different. But not surprisingly, your questions today will be answered live. So if you would please go into the Q&A box and we will get to your questions. We will answer those at the conclusion of today's webinar. So the Q&A box, our resources today in the chat box will be administered by Maureen Busher-Dang. So you'll be a lot to do in the chat box. So thank you all for coming along. And let's start with a little quick poll today. And so just setting up today's poll question, because this is a poll question, it'll probably go later in the program, but it's happening now. And that is the fact that, number one, we're going to be talking about the work of two fine local people here in Bakersfield, and that is going to be Morgan Clayton and John Pryor, who actually wrote the field book manual that we'll be talking about a lot today. So just an inside question here, little whimsical question, is Morgan Clayton and John Pryor share what prestigious award? Is it the John Brock Award? Is it Central California Small Business of the Year, or is it an Excellence in Risk Management? I like throwing a question out there that's hard for you because, a lot of times we do discuss this on the webinar, but a lot of times we do not. But John Clayton, and they share a lot of things, both entrepreneurs, both very established in their communities, both community resources beyond a reproach, but they share one common award. And what is that award? Okay, we do have 50% of you that are throwing out your best guess. And I'm going to get it just a tick higher, a little bit higher, and then Actually, I'm going to close the poll. So come on, one more person. Let's get over the 62% of you that we have committed right now and get one more guess out there. One more outstanding guess. Thank you so much. We will end the poll and share the results. 45% of you say the John Brock Award, and that is correct. The John Brock Award is an annual award given by Cal State Bakersfield out of the School of Business and Public Administration that combines two great qualities of a great business person and the work that they do in their community. Two things that always should be compared together. And the John Brock is an award list that one time I'm going to share this because it is essentially a who's who of business owners in Kern County that do an incredible amount of work in the community. So it is the John Brock Award. 45% of you, 36% went with the Central California Small Business of the Year. And why wouldn't you? Because we'll be talking about that right now as well. But also 18% excellence in risk management, which I think they both qualify now too. And we'll find out for sure by the conclusion of today's webinar. So thank you for allowing me to go through that particular exercise. We will now close the poll and move along. So for those of you that did mention the Central Valley, the Small Business of the Year celebration, we did have that just 2 weeks ago today, and it was a marvelous celebration. It was one where when I showed you this map, and I got a couple of pictures here, but then also this map of the entire Central California region, and you know, it's from the grapevines of Kern to way up in here in the ocean in Nevada. We celebrated one business this year as our outstanding business of the year. And that went to United Pipe and Steel Fabrication and to their owners, Ivan and Gabriela Ayala. And they have been in business for about 15 years, and they're pictured there with their consultant, their advisor, Jay Thompson. And they've been a business that has grown phenomenally over the last 13 years and employ a lot of very nice, skilled, high-paying wages here. It's great to be able to recognize a manufacturing small business because those are the ones that seem to be the hardest to start and grow here in the Valley. So a big congratulations to Ivan and Gabriela. And we celebrated that 2 weeks ago as part of Small Business a Week. And it culminated with a banquet here in downtown Bakersfield or in the Bakersfield area. And also with an award given by our regional executive director, Mr. Curtis Clark, presenting the award here locally at that award banquet. So a great time was had by all. So thank you for indulging me as we celebrate Small Business Month one last time. And again, boy, I tell you, 13 counties. So moving along, let's jump into our economic corner. And in our economic corner, you know, a couple of weeks ago, we have been kind of in a holding rate as far as our federal funds rate, which really typically is the basement of all interest rates. For a long period of time, this interest rate was at or near zero for a long period of time. It is now hovering at 5.3%. It is firmer than anticipated inflation that has likely postponed rate cuts for the foreseeable future. Hopefully we can get those down. And officials are likely to hold rates steady for longer than they had hoped to restrain economic activity. When interest rates are higher, projects don't happen. And when projects don't happen, then that is good for maybe too many dollars chasing too many goods, which also helps drive up cost in certain areas. So interest rates, you know, for some of the people I talk to that have an SBA 7A loan, the guaranteed loan program, is right around 11%. And these are rates that haven't been around for a long time. So we are stuck with higher interest rates for a while. Unfortunately, it looks like we're stuck with higher insurance costs, and just really, I feel for a lot of small businesses that are going through both of those dramatic increases, knowing how tough of an environment it already is out there. So interest rates, and of course, why they matter is that it affects business borrowing. It pretty much every level. Every level from the corporate levels down to our small business level. It's what I just provided an example of. It impacts the federal budget with higher interest payments, therefore creating higher budget deficits or less spending on other items that they could be spent on. And maybe most importantly, it's affecting consumer disposable spending in many key areas such as hospitality and travel. You've heard us on Webinar Wednesday talk about a lot of the issues going on in the hospitality industry and an area to where it is hard to raise prices because it is a disposable spending area to where people like going out and eating and they like traveling, but it isn't necessarily something that they have to do. So on our capital quarter segment today, just to talk real quickly about lines of credit. And lines of credit, I think, are a program where a lot of people say, gee, you know, lines of credit are great because I can borrow the money and I can pay based on that particular interest. The amount that I borrow is only what I pay interest on. If you get a term loan, you go out and get a $100,000 term loan, for example. Maybe you spend some of that now, maybe you spend some of it later, and you are paying the full amount of interest on that. So that is how we tie it into the interest discussion. But there are pros and cons of lines of credit. Generally, lenders are looking to fund lines of credit for businesses that carry some type of receivable, have a business nature that spikes. Maybe it's a seasonal business. Maybe it's something that you need to actually jump up for like maybe the holidays, but there's a spike to it. There's an unusual period. Maybe it's doing business with the government because oftentimes government is perceived as being slower to pay. And whereas you get those government contracts, it might take you longer to actually get that payment. But hopefully you have the margins to support that. Credit lines are not easy to acquire. Again, lenders look for specific purposes on why you need that. And what you need to do is you need to be able to clear off that account. So if you have a $50,000 credit line, one day during that particular year, a credit line needs to be at zero. So you borrow parts of it, the money comes in, you pay it back down. But credit lines, if you can get them, and there are becoming a few that we're finding that are out there, are excellent ways to fund and maybe pay a little bit less interest only on the amounts of the monies that you actually use. Our business ownership information, it's that database that the government is working with on putting together for mostly smaller businesses, but it is basically to eliminate certain areas of the society that the financial crimes enforcement network is trying to weed out, and those are mostly money laundering. It's also doing things with certain other questionable type of businesses where they think hide money. So there is the FinCEN website that you go to. If you have actually formed an LLC or an incorporation, your filing needed to be done before about April 1st. So if you did it in the first quarter, it is due. So keep that in mind if you have one. If not, I think we're still on path. The latest I had heard on this for everybody else that has incorporated or LLCs to get this information in by next year. So again, it's just your personal information on the ownership of your business, your contact information, your address, and things like that. Our latest region-wide home care business cohort for individuals wanting to start a home child care business and understand how to make money at it, which is incredibly important for both workers that need child care for their children and also the small businesses that put in the effort and the pain and sacrifice of actually providing these services for us in the community. English and Spanish, both classes. They did start 2 weeks ago today. You can learn more. You may be able to just jump in and catch up if you know somebody that is looking to get them some good business foundation. This is a business class that helps them get their registration and their licensing moving forward. You'll never receive an email such as this from the SBDC wanting your Social Security or banking information. We do provide no-cost consulting, valuable consulting to individuals. We do not provide loans or other fundings, but we know what that is, so we can help you in that regards. But never, if you get an email from the SBDC, never go forward and think that it is necessarily from us. We have a lot of tools to help you run your business at the SBDC. Some of those include Live Plan, our YouTube channel. Another one is the Clayton Leadership Transition Plan. And this was one that is, you want to see this webinar? It's on our YouTube channel. It was one done last March with Morgan and his daughter, Tasha, and actually showed and detailed how you can actually, the steps you need to take to transition your business to the next level of leadership. And a lot of ways we see people transitioning business. This is the fruits and labors of a successful transfer. And really, the webinar will really show you that there is so much that needs to be done and so much the thought process that goes into transitioning to the next generation. And that'll be found on our YouTube channel, our CSUB YouTube channel. 400 and something subscribers. Go there to get the most recent webinar at any time. Also, we'd love your feedback for today's webinar. You can review us on Google. So go ahead and do that. Let us know. If you have wonderful things to say, jump right on in there. If you have a question or something else, you contact me directly. I'm always here to handle any of concerns that you might have, either from our training, our webinars, or advising, any service here at the SBDC. And lastly, our free human resource hotline. That is maybe not our free human service hotline, but we promote it enough to where we think we own it. You can see a number of businesses throughout the San Joaquin Valley and the Sierra Foothills, and also the Eastern Sierra Range. You can see that the Central Valley has Central Valley counties, mainly through workforce development boards, have partnered with the California Employer Association. Call a hotline if you have an HR question that you need to do. So let's jump into today's topic. And today we're going to be talking about risk management and insurance. And just real quick, I wanted to jump in and give you at least the industry's definition on why insurance costs are increasing. And one of the main ones is we are seeing inflation, and we're seeing inflation in what it costs to repair claims for insurance companies. I was explaining to Morgan a situation that I saw, and it's scary, where you actually see the high cost of repairing automobiles and the high cost of repairing some home damage that is going on in today's environment. And so inflation is really driving and some of the challenges that we have with supply chains. So inflation is one of them. Another really kind of uncommon area where none of us really think too much about is that major insurance companies generally will not shoulder the entire risk that they insure. And so that there's a thing called reinsurance. And this reinsurance are large, very large companies who will take a portion of the risk for insurance companies. And the reinsurance is a global, unregulated industry, and a lot of the costs are being driven out of there. Maybe they're being driven by claims and other things, or profits, or whatever. But speaking of profits, reinsurance companies and insurance companies have a profit motivation. They have shareholder demands that they earn returns. And probably what's worse for us consumers, and being a homeowner, a business owner, or somebody who drives an automobile, or any other way that you consume insurance policies, is that they can pass costs along to the consumer, because we have to have insurance. It's almost a certainty that we have to have insurance. So you buy a new car and you're paying for it over time, you have to have insurance on that car. That is a necessity of actually going through the process of doing that purchase. You have a mortgage on some real estate, you have to have it. Unfortunately, most of our businesses are not in the position to be able to pass cost on the consumers like insurance companies do. And through a lot of this is they're trying to manage it by eliminating a lot of the high risk region areas. I know having a mountain property in a high risk area, and as of December, not having insurance on it. So I know as well as all of us on this particular topic. So those are some of the areas. We're going to be getting into a one thing right here. I'll hold up the version of it because it's really what we call a really, really great book. And it is the Quality Risk Management Field Book that's authored by John Pryor. And we're going to get into a lot of that, and some of the quotes. Is the thing I really like about the quotes on this particular book is that it comes both from the insurance industry and from small business owners associations. So you can see where both parties need to be involved in this process. So that's a couple of quotes that we have moving forward in this particular book. There's a little bit better view of the book, and are very proud of John Pryor, not only as author, community benefactor, so many good things he does in the community, an SBDC consultant. And we're trying to set up some times to where we can work with maybe sessions after we leave here today with John and work with you on a one-on-one basis for those that want more information. If you think I'm trying to sell you the book, think again. You can't buy it. My signed autograph copy and Morgan's signed autograph copies are probably the last two that are floating around Bakersfield, and they're not floating anymore. So you can't buy the book anymore, but you can get great expertise on this webinar. And that is going to come from today's special guest, Morgan Clayton, who's the founder and chair of Tel-Tec Security Systems, Inc., founded in 1983. I can't go past 1983 by every time I talk to Morgan, and I remember he started his business in 1993. That year was the worst recession of any year, with the exception possibly of 2008, with the Great Recession of 2008. 83 was a terrible year. Morgan, as we have mentioned, is a veteran of Webinar Wednesdays. He's been here a few times with us, and now as chairman is free to work on special projects, including the high cost of insurance. Morgan, it's great to bring you in here today. Thank you for joining us. Take it away.
Kelly, thanks for having me today, and really thank your audience. And first want to give just a great thank you out to John Pryor. He gave me a great homework assignment. I've got his book. I took a deep dive into it. And also to my daughter, Tasha, where we kind of walked and talked current knowledge and risk management toolkitting along with the book to give you the best take-home value for your small business. Let me kind of hit some of the key points so that we can kind of get your questions. Here's what's top of mind. Probably let's begin with the end in mind. The biggest liability you can have is your mouth, where you are not being careful about when there's a risk or a liability, saying what you shouldn't say. So you really need to be very cautious when you enter into a risk situation, not to overtalk, undertalk, but just simply pause and be silent and reach out to your insurance providers to kind of build in collaboration what you need so you don't get yourself in overexposed risk. So the biggest liability you will have is your mouth. The second is, and I love this one, kind of my quote to you, using friends that are not experts in the industry will at some point cost you. It has me over the years, and what I've learned is to lean very heavily on people like John and his workbook and others in our industry to really help us through making sure we mitigate risk. So let's kind of dive into some key points before we kind of get into Q&A. What are some things that are very top level that you need to be assured of? Here are some of the points. One, surround yourself with experienced experts like John and others in the industry that can give you the right information to close the gaps on your protecting your veil. I think what's really important is do not go online looking at checking the box opportunities for yourself, because yes, online can be good education, but having that two-way conversation with a broker or insurance company is going to be able to share with you what areas you need to cover before you put yourself at risk. The other thing is that when you enter into these relationships with your insurance brokers, you want to make sure that you get the right insurance broker. And basically what I use is a simple gauge. A person who is right for you will be responsive to you. A person who's not responsive to you is not a good person for you to have. Why? Because it's not a matter of if, it's when it happens, and you want to mitigate that to ensure you don't lose a lot of your corporate corpus. The third thing you want to have is a good safety program, and this is where you simply, again, dive into the areas, if you have automobiles, equipment, things that could really cause harm to people or property. You want to basically have a good safety program for ensuring your people operating safely, as well as good documentation to ensure that people know they can follow the rules and everyone is on the same page. The next item is really measuring your relationship with the people who are responsive to your needs, and that is, how often do you do a audit, a check-in on what you have? You may find that your business is progressively growing very quickly, and so therefore the liability insurance you have in place now may be too low. Your business may be under pressure since COVID, and you may need a reevaluation. But the way I look at it, because inflation, I guarantee that cost probably will not go down. It may stay the same, but it probably won't go down. So it's really something to look at. Something very important that when my daughter and I were talking, Tasha, who, by the way, is now president, and I'm chairman of the board, so we really collaborate a lot. You really, really, really need to pause when you get estimates or when you're talking to organizations, insurance brokers, read the contract for gaps, exposures, because once you trust someone and you don't verify, you may find yourself like I did probably 25 years ago, because Tel-Tec's been in business 42 years, where there was a line I missed, and that was my line to pay. It was a very expensive lesson for me, but what I learned from that is, as Ronald Reagan said, I trust, but I'm going to verify what you say. The other thing that's happened, I thought you'd find this interesting, because Kelly and I were talking about it earlier. Where is Tel-Tec today? Where Tel-Tec is today is Tasha and I have been talking. She's been doing a lot of research. And where we are today, we're transitioning from our HR department being internal to moving it externally. Why? We're doing it because we find that the experts who know this business in California's rapidly changing climate, business climate, where costs are always going up, we need to stay on top of what's current. So by outsourcing this, we are getting two things. One, we're resourcing an agency that is doing it every day. So therefore, they're going to know where the gaps are and where the landmines are. The other is that we are paying them a resource basically to ensure that we get the right information. So we are basically looking to do that this year. Something very, very important for us, as opposed to having just an internal person. Not to say that your internal team is not effective. It's just that what we're finding from a cost-effective standpoint, we want to stay current because we are continuing to grow in the region. The other thing that's very important is you need a team of experts to ensure you can protect your business against loss. And what's important about that is how much onboard education is your current HR person or your current HR provider. How often are they doing education to stay up with the climate of what's going on in California? Because keep in mind, at the end of the day, the loss is yours if something happens. Excuse me. And I think finally, as we kind of dive into this, you really don't know what you don't know. And as I say to my own team, we hate surprises, because surprises do two things. One, it's not a birthday cake. Usually when you get a surprise, it's something that is either going to affect the corporate veil, affect your PTO, affect your liability, affect your relationships with people. So the key is to stay on top of it and check into it often. And with that, I think do your homework. In summary, do your homework, ask the hard questions, read the contracts, have valued, experienced relationships like I have with John Pryor and others, and don't be afraid to ask that question. But more importantly, as I close down and pass this back on to Kelly, don't let your mouth be your biggest liability, because it could happen to you. So Kelly, I'm going to pass this back on to you for this quick piece.
Well,
And
come on in here. Let's work on one camera.
there you go. That's good.
So, in going through the quality risk management field book,
Yeah.
I'm sure you learned a lot, and you learned a lot about, I remember when we first talked about this about 3 months ago.
Yeah.
I remember I had seen then State Assembly Member Fong, now our Congressman Fong, at a conference in Ridgecrest talking about, he's on the insurance commission. And he talked about it. There was a great article in the Bakersfield Californian back then. But what we were really getting at then is when we were starting to get the inquiries. And so we had talked about you taking the field book. And so in a long question, what did you, from a case study standpoint, what did you learn about Tel-Tec, and then learned about some of maybe the shortcomings or some of the issues that you have as related to risk management?
Here's what I learned from John, from his book. And as I say, you don't know what you don't know. Typically, when you go into business, you realize you need your general insurance, liability, that kind of thing. You then move into the safety factors. But this is where, as I dove into John's book, there is the idea of well-being for everyone. There's the idea of the safety programs, the risk management process, the risk control, the disaster preparedness, which is your company operating within the community of that business, and the liability and exposures that come from that. The risk finance, where you really are taking a dive into the determination of how an organization will pay for losses in event of an effective, most effective and least loss, basically least cost way of looking at a high-risk situation and what's going to be the minimum cost to pay for that.
Mm-hmm.
The other is really to go into the non-insurance risk transfers, looking at risk assumptions, commercial insurance. My point is, when I dove into the book, I said, wow, there are so many gaps that you could expose yourself, and you need to really be aware of this. That's why I say trust professionals, and that's what John's book gave me, along with his coaching, to kind of dive into these top 10.
So when you jumped into it, did you, I know the book has literally hundreds of charts and diagrams and forms, blank forms that are designed to take to your insurance agent.
Exactly.
But I think it's really a fact-finding mission in order to for you to understand where your risk management gaps are, at least initially, by filling out your assets and things like that. Is that the process that you took?
That's exactly what we took, along with the fact that we talked to our brokers. Because keep in mind, they track it probably better than you, along with not only your local data, but industry data. So you're able to really scale and look at, where you are from a standpoint of good behavior. The second is, what does bad behavior look like, and charting that and being able to mitigate cost or to negotiate cost because you are a good safety person or a good process person of basically managing how you handle risk.
So take us through the processes that you went through. Did you start with identifying assets? Did you then start matching that up to coverage? What was the exact process?
Here's the pathway, and talking with Tasha and myself, here's kind of a quick high pathway.
Mm-hmm.
Basically, we looked at Tel-Tec being in business over 42 years. We normally annualize and look at our insurance annually. But really what happens is, when you look at the insurance, you really don't take the time to look at your trucks going from 10 to 25 vehicles, and looking at your liability coverage from going, for example, you're monitoring 10,000 accounts, but now you have 20,000 accounts, and your exposure grows, but yet you've retained the same liability insurance. So you really have to really relook at what your corporate value is today, as opposed to trying to get the lowest cost. So what our data showed was, we just really need to go in and chime in with what is the right number. An example would be, you have a coverage of $1 million or $2 million policy, but as a result of your growth, you have to increase that up to $5 or $10 million to cover what potential risk might be, and then in other sectors. So really, the data drives it, along with the balance sheet.
And it seems like a dynamic target. For example, so you mentioned you had a fleet. So if you have a fleet of 25 vehicles, for example, I'm sure your insurance is being judged or rated on, you're paying on, how many miles you drive that fleet. You're being judged also, or actually paying on, the value of that particular fleet. And you have those vehicles that are depreciating on a monthly basis.
Correct. But the key thing of it is when you're doing that, and you're exactly correct, but here's the key. What if you've got X amount of employees, but you find 2 or 3 of them have DUIs, or they have certain things within their driving record, which then throw them into a risk threshold that raises your prices? So you have to be very careful about auditing, not just what you said earlier about the vehicle aging out, if you will, But also it's the employee driving the vehicle to be sure they're on point, because it's a balance, because it can cost you more.
Do you have a policy where you go through and anybody that drives a vehicle, you have a detailed background check on that process? Is that something that you do or something you can do? Or
No, we
do?
do that. We do a complete background. We get the complete backgrounds on their DMVs. We completely check all of that, because it gets down to the point where if you have an employee that's highly talented, but is risk tolerant, when you put it out there, that person is high risk, it's going to cost you to have that person on payroll. And when you look at the expectation, it could be the means may be a little heavy, or my point is the person may not be able to drive.
Yeah.
Where it requires driving.
He gets to ride.
Yeah, he gets to ride a bicycle or something. Yeah.
Okay, so, that's interesting because, there's been a lot in the news lately about when the fast food minimum wage went up to $20 an hour back on April 1st.
Yeah.
I think it was April 1st. And what you saw was I think there was Red Table Pizza and a couple of others that immediately eliminated their fleet of dual delivery.
Yes.
And I mean, we go back a long time, Morgan, but
Yeah.
we've had the pizza delivered for a long time too.
Exactly correct.
It was the deal. So you're seeing that it's not worth it anymore for them. And I don't know if it was I'm sure it was a combination of both the insurance cost and the hike in the minimum wage.
It had to be, because if you look at the fact you're delivering a pizza or whatever the delivery is by way of food, there is the mileage on the vehicle, there is the cost of the individual driving the vehicle, and now you have the inflation impacted on the cost. The example would be when you and I were doing it, you could get a pizza for what, $5 or $8 if you would. You do that today, it's going to probably cost you 25 or 30 bucks. And when you look at the way people drive, that is a whole factor within itself. So the question becomes, the risk is so high, you just don't, there's no return on investment.
Yeah.
And at this point, the community aspect of helping people is one thing, but when you can't get a return on your investment, how can you reinvest back in your community? So that's where a lot of that goes away. Maybe they'll start doing it by drone or bicycle one day, but at this point, inflation has hit it to where it makes it very tough to get a good return on investment, especially if you're in the food services business. I applaud people that do that. That's a tough business to be in. It's very tough. Yeah. And at the end of the day, not only tough, but we as consumers have an high expectation on food quality. And if you don't get the quality, an example would be, we went out to dinner, my wife and my daughter and my family. I thought we were going to be getting a high value, and we spent $200 on something where it wasn't worth the value. So not only did they lose a customer, I lost faith in the organization. So it's hard to measure that. And it's the same quality that hits a small business. If you don't show up and provide the service that people ask you for at a value that they expect, it's very difficult for you to get that client to stay. Yeah. So it's basically, inflation's all over the place. It hits us all.
So I think we hit on automobile pretty good and fleet. Obviously, businesses that have property insurance, property on maybe a real estate building, or even maybe some of their equipment beyond automobiles. Yeah. Did you have quite a bit of that, or did you look into that a lot?
Yeah, basically, Tel-Tec runs 24/7. Because we're a security company, we have roughly 20,000 customers who are running service all day regionally. And so when you look at it, it's an example would be, we have drills, we have safety gear. So when we're working on construction sites, you have to have appropriate attire. If you're welding, around welding, you have to have certain attire, certain safety classes. So where am I going with that? Safety training that we've had to implement it. Tasha's put this in place, where we have constant safety training that comes in just for forklift safety, vehicle safety, road safety. We have so much safety, safety, but the key of it is it's expensive. And you have to have it, because if you don't have it, especially, for example, if you were to go on an oil field site or a large construction site, they require you to go through safety exercises to show that you are not only behaving properly on their property, but basically mitigating their risk. But if you haven't prepared yourself, safe vehicle, all of the tools you need, all the things you need to do a good job. Meaning, if you are not taking care of your equipment safely, you can create a hazard for someone else that could cause a lot of damage. So we do that. We basically do what we call walkarounds. That is, you open up the vehicle, you do a walk around, you check everything in the vehicle, from the tools to the tires to the tread on the tires to what's in the vehicle to keep the person safe. We do that on a weekly basis.
Wow.
There you go.
Yeah, I'm hearing a lot also from people with liability insurance, business liability insurance,
Yeah.
where it's a real issue and it's continuing to go up. You don't hear about it as much as, say, vehicles and property, at least in the news, I believe. But when you get into it with a lot of people that are paying more in liability insurance, I remember talking with one of our advisors we mentioned earlier, Jay Thompson, and 90% is what his liability's gone up.
Oh, I could tell you people that's gone up 100%. I'll give you one that was recent. We had a customer that called. We thought it was a potential break-in, but it was a homeless group that stole all of the air conditioning motors out of the air conditionings.
Okay.
And so when you look at that, when we were talking to the client, or as I was talking, does the client turn that into their insurance, or do they bury the burden themselves? And when you have a lot of that, windows, doors, air conditionings, electrical cabling, it's hard.
Yeah. And
your insurance company will obviously, after so many risk factors, your insurance company is going to go up, and in this climate will probably cancel your insurance. So you have to be careful.
Yeah, you don't think about the amount of insurance claims that individuals eat.
Oh,
out of the fear of, trying to balance that with, how much is it going to increase my premiums?
yeah. Well, look at downtown, where downtown was exposed to the glass break kind of thing that was going on, with so much glass breaking. I'm sure a lot of those owners paid that cost for a while, but then when they shared that burden over to their insurance companies, I can guarantee you, if you went back, a lot of them got increased premiums. So therefore, that's why I think the city got involved and created some good programs, and obviously helped a lot. But it has to be a collective effort, a team effort, to make sure that we keep risk down, to keep costs down, so that we can control inflation.
So what do you think? What do you think some of the you like this? We don't work off scripted questions here.
No,
it's
good.
So here's one for you. What do you think are some of the best practices that you learned from the book? That businesses really can implement at its very easiest.
One, starting with what I started with, excuse me, control what you say, pause and get an expert in the field that you have interest in, go online and read the contract before you execute the contract. Number three, reach out to people who have had experiences beyond you that are bigger than you or larger to see what they are doing. Number four, pool resources, where I'm involved in some associations where you can pool your liability to try to reduce cost because you're in higher volume numbers. Those are the things that I've learned from the book from John, which is really understanding the difference between all of these programs, from safety programs to risk management to risk control, understanding the difference of these things, because some people think insurance covers it all. There are different programs. So that's what I've learned from the book that I was awakened to. There's so many different things you need to be aware of. And what you need to do is understand where your risk and exposure is based on the minimum to the maximum, but all of it has meaning. So that's what I've learned.
Sounds like it takes a lot of time and effort managing risk.
It takes a lot and time of effort, except this thing I really believe. We all only get 24 hours. And in that 24 hours, you've got to manage what's most important between family, work, and basically your own wellness. You are going to spend time 24/7 trying to manage something that's not your expertise. I'm in the security business, so I understand it. I know what insurance looks like. I know what it feels like. I certainly know what the pay is like. But I go to people like John Pryor to say, help me to explain how to manage this well to keep my cost as low as possible. So the key word is researching it, but I think more than researching it, asking experts first, because information for the most part is free. And once you get the information, you'll make the right decision because you want to protect your family, your business, and you want to protect your livelihood.
So if we talk a little bit about risk management and insurance,
Yeah.
the key I think is, and do correct me because I know far less. And that would be is that looking at risk
Mhm.
and managing risk, there are some levels that each individual has to feel comfortable with. Can I afford to lose this much if my premium's going to be this much?
Mhm.
Can I do this? I mean, I made a decision to uninsure my mountain property based on this.
Yeah.
But that was a personal decision based on I evaluated the risk principles of what I had to lose and what I lost.
Yeah.
And offset that to what I would be paying insurance premium wise, not only this year, but continually if I don't hopefully have a loss.
Yeah, your risk tolerance to that is, here's the way I look at it. One, and you're exactly correct. When you look at your risk tolerance, you say, okay, I'll go back to many years ago, $100 deductible. You gave them $100 and they paid the difference. Then it went to $500 deductibles, then 1,000. I would guarantee you deductibles are there at $5,000 to $10,000 to handle the risk tolerance. But to go back to the earlier question, when you said to me, because I really respect you as my friend, that you have a mountain property that has no insurance, you're saying to yourself that if this thing burns down, has a major accident, I'm willing to take the risk. That risk tolerance would probably keep me up at night.
Let me rephrase that.
Okay, rephrase it. Okay.
I have no fire insurance.
Okay, gotcha.
So
So-
if it burns, then it's me to get rid of it.
Well, no, okay, so let's assume no fire insurance. And what you're saying to yourself then, you understand that you're gonna go up there and pay attention to the clearances. You're gonna ensure there's nothing close to it to do the best you can. So I get that. And so I understand that, and that makes sense to me. The real question is though, in talking to an expert, sometimes there are other things that are available that can help offset it. If not, you do the best safety thing you can. But when I look at small business, I really strongly recommend that you take the strongest deductible that you can take, get the maximum package you can get, and then also look at what they call extended liability when you're in high risk areas. And again, you can manage that based on the business that you're in.
Excellent.
All right.
Okay, so we do have time for questions and a lot of questions. I can keep asking them,
Oh, yeah.
but I'd rather hear yours. I think you have better questions than I do, people. So do go to the Q&A box and pop your question in there for Morgan Clayton, who has spent more than 100 checklists are here in the risk management field book that you cannot buy. But, we will tell you about an opportunity to perhaps meet with the author and to sit down and start looking at the process and look at some of the checklists that are in there and start assessing your own particular risk for your business. And maybe then on how you can actually save money with insurance.
Yes.
Because you might be paying for more insurance than you actually need. And so it's just really understanding that risk tolerance that you have upward.
Yeah.
With the amount that you are paying. So we do have a question. Let's jump in and see that. Do you enroll, Morgan, in a pool program? Pool. Is it pool or pool? Pool.
I think it means pool. Yeah, Tel-Tec is involved in a group called ADA, would be Alarm Dealers Association, where you can go in and you can purchase inventories in a group, and you can do volume purchases and insurance if you want. The goal is that there's a risk tolerance within the group where you're educating, everyone's kind of sharing data, obviously to keep your premiums down, but there's a shared pool cost there to do that. And those are available. I think if you look into your industry and look into associations, you'll find there are a lot of associations that do that. So you might want to check out associations for pooling your insurance costs. But again, you have to be sure you have a good record yourself, because a lot of times people will go into pools because they want risk tolerance, but they've been bad boy and bad girl, and they have high risk. That won't get you into the pool. You have to really have a pay attention attitude and have good numbers so everybody wins. That's the key. It's a team effort to win, to keep costs down. And as long as you have a good score, everybody wins.
Great. One thing that we haven't talked much about and that's disaster preparedness and how it falls into risk. And when you really talk about risk management, a lot of people will come to the SBDC and they'll say, gee, I want to form an LLC because I want to protect my personal assets.
Sure.
And, when I talked to John Pryor over the years, he'll say, well, the first way you do that is with liability insurance.
Yes.
You always have the liability insurance in place, and then the next form is a legal entity.
Yeah.
But really, one thing that we don't talk a lot about, and we do live in fire-prone areas and flood-prone areas, is the disaster preparedness and then the business continuity insurance, which is really one of the more expensive ones that I've heard of. So do you have much experience with disaster preparedness?
Yeah.
Did you read, was there much in the book on it?
There's a lot in the book, a lot of good stuff. Let me just kind of give you some key pointers I think would be helpful. I'll give you the worst. We had a situation once where our power cables were completely severed from our building. And as a result of it, it took PG&E working with Fresno over 24 hours to fix that cable. And we were without protection for a while, which put us at a big risk. Having a disaster preparedness plan, which we had in place, saved us so many thousands of dollars because every manager, every dispatcher, every service person knew what to do when the urgency occurred. For me, the best thing to do when you talk about disaster preparedness, like for example, earthquake preparedness. Most people will probably say there's not going to be an earthquake or a fire, but there could be. And if it happens, when you look at the people you care about, the employees you care about, what do you want them to do? Because most business owners who are actively growing and thriving are not normally at the destinations where things happen. So having a written plan, sitting down, talking about the plan, and now here's the key thing: do fire drills where you actually initiate a false positive, where they go in and they create this circumstance to get people to remember. So I think disaster preparedness could be for someone, for example, you have a restaurant and you're about ready to open for noon and you find out that your stoves just went out. What kind of disaster plan, or what kind of plan do you have? And some people say that's not really a disaster plan. Well, it would be if all of your cooks walked out, right? So I think the easy answer to that is pause and ask yourself, what is the worst thing that could potentially happen? Sit down and again, call your insurance expert and ask them in your database, what are the things that have happened? And then build a red book, response book to that incorporates your business, law enforcement, hazardous waste people, all the agencies, call ambulance or wherever the ambulance company is, but it incorporates all those notifications, all the phone lines, all the phone numbers, so that you can have a quick reference or a quick book to respond to. So that's what I see disaster preparedness is, and we have that. We have one of those plans in place.
Well, Joe's offered a little bit of a follow-up on the pool program. It is the pool program, and for drivers offered by DMV, maybe for impacted drivers with impacted driving records.
Yeah.
Are you familiar with the pool program from DMV?
I am not familiar with it. I'll do some research on it, but that's the first I've heard of it. I'm not aware of that.
Okay, next question. Marcus asked a question. When should you decide to pay out of pocket for expenses versus filing a claim? Is there a magic number or frequency that triggers the insurance company to drop your business?
You know, this is how I look at it. It's a simple one-on-one to me. If I look at, let's say I'm looking at an exposure that's borderline where my deductible is $5,000 and the event is $6,000. So do I want to turn that into the insurance company? Here's the key question. If you call your trusted broker and you say, look, if I execute having you guys pay for this, what do you think the principal increase is going to be the following year, if any? They're going to give you a pretty good window of whether you're going to receive an increase or not. And if you pay for it out of pocket and you can hold the line, sometimes that's more valuable. But in some cases, you can't afford to do that. You just have to turn it over. One example would be when my wife and I and our family went away for Christmas and my entire home was flooded. Basically, 5,000 square foot home, completely flooded. I couldn't cover that cost to save my life. And so basically we turned it over to our State Farm agency. We worked in collaboration. They did an amazing job, by the way. I fully restored everything back. But in that case, did my premiums go up the following year? No, not really, very little.
Wow.
I mean,
What year was that?
that was 2 years ago. Knock on wood and iron and all that. But the key becomes asking your broker, because again, if you look at the history and it's 1 or 2 times, sometimes there's grace, but if there are constant losses, equipment, automobile damage, you can almost be assured your premiums are going to go up.
Okay, so let's hit the chat real quick because we're running out of time, Morgan. I can talk about this for 2 more hours.
Fun stuff. All right.
Okay, so a little on the Maureen has in here a little from the Corporate Transparency Act and the Nurture No-Cost Training for New Childcare Businesses.
Wow.
There's our YouTube channel. You'll see Morgan in there on quite a few different occasions.
Yeah.
SBDC information. You want some no-cost consulting from an experienced, and I mean an experienced team of business advisors. You contact the CSUB SBDC. That is in there along with the family business succession planning. Morgan, anything else to add?
No, I think you've done a good job, Kelly. You're in your team. I think you really want to take and do an audit. I think that would be my closing statement, just to say, if you've had losses over the past 2 years, and don't worry too much about it, but if your business has soared or grown, just pause and do an audit just to look at the numbers. Doesn't mean you're going to execute, but just do the homework. That's the key. Do the homework.
So, as we wind up on time, what we can do also is we've been talking with John about being available to meet one-on-one with clients. If you have a particular business issue, there might be some forms that he can give you for homework, and he can assist you and guide you along the way. If you have like you had mentioned, a trusted advisor trusted insurance agent.
That's exactly correct.
That is your best friend in this. The book, and it is a field book. It's not a textbook. It's not a novel. It is the Quality Risk Management Field Book, and what it does is it kind of works as an interface between you and your broker to reduce the amount of coverages to the amount that you need, or actually increase those to the amount that you need. I don't know. Could be either way. But one way or another, we can work with you on that. Send us an email if you want to, or if you want to meet with John Pryor. We'll put something out. Maureen will follow up on this and send you out a copy of this webinar for those that have signed up. And also the resources that we talked about and more information on potentially signing up and working with our risk management consulting team. So any last comments?
No, I was just ditto what you said. I think to your listeners, to basically send your questions and use John as a resource. I think to get that kind of knowledge and years of experience back to you is going to save you a lot of sleepless nights. So I want to ditto that. He's a very good resource locally.
Great.
All right.
Fantastic. Thank you so much.
Thank you, Kelly, and look forward.
I expected a lot when I gave you, one of the 2 quality risk management field books, but you knocked it out of the park, man.
Yeah, I appreciate that. And again, we want to thank John because he gave me the homework assignment and we got it done. So it's all good.
Okay.
All right.
So for my friend over here, Morgan Clayton, I'm Kelly Bearden. We'll be back on June the 12th for our next webinar, webinar 320.
There you go.
Stay cool because it's going to get hot.
Yeah, very much so.
Okay. Take care, everyone.
All right. Take care.